Joining us now for reaction is halftime committee member Stephanie Link, portfolio manager and chief market strategist at Hightower. We have a lot to get through, but you were a Twitter shareholder. If you were still, how would you vote in that poll?
Well, I mean, it's a hard question to answer, but I would vote for him taking over. They do need a lot of help, Scott. You know, I've owned this in the past, but it's only been like a trading kind of a stock to me in the past because they couldn't execute. They put new products together all of last year, and yet they had engagement fall. So at this point, they need a lot of help. The problem is the CEO has only been there since November. He hasn't even had a chance to make the changes. So there's so many moving parts. It's not trading on fundamentals, but if I could get 54.20 after I have the stock at roughly 45, 46, I would take the money and run.
I'm kind of surprised to hear you say that you wouldn't say, you know what, it's undervalued. The stock was trading at north of $70, and it was around this range for a while in the last year also. I'm kind of surprised that you said that.
Well, I think they have a lot to do, and I think it's going to take a very long time. And you know I am all about a restructuring story, and I have patience more than most people. But I think there's so much in terms of competition on social. There's so many things they have to do. There's so many unanswered questions. And so if I could get 54.20 and I owned it here, I would do it. You
know why I know you have more patience than most, Stephanie Link? Because you own IBM. Sorry, but I had to say
set you up
that.
for that.
Because, yes, you totally did. Right when I heard you say it, I was like, oh, my God, I'm going there totally. Seriously. I mean, you've been waiting for the turnaround. Yep. Today it got upgraded. Yep. They say, you know, overweight at Morgan Stanley. They call it a place to hide amid macro uncertainty.
Well, you know, and it's interesting. Year to date, it actually has outperformed technology. It's only down 5%. I mean, only. It's still down. But the XLK is down 15%, right? And we know technology, many stocks are down even more than that. So it has done its defensive job. We'll have to see if they can execute next week. Restructurings take time. The CEO has been there for 2 years. I think it's time, right? And they are restructuring the company into more of a cloud and AI kind of company, quantum computing, and that sort, even blockchain and that sort of thing. So they made a ton of acquisitions. Now it has to work, Scott. This year they have to execute, and it has to work, and they have to see better than expected growth. And I think they will, because they've been shedding non-core assets, and more of their revenues are recurring revenues in software and consulting. So they'll have better visibility. So $35 billion in free cash flow, trades at 12 times earnings. I get a 5 yield.
Speaking of turnarounds, Wells Fargo. Not great.
See, here we go
Kramer
again.
was darn angry about it. Kramer was angry
he shouldn't be.
Why? I mean,
I don't think he should be angry.
They're not executing,
though.
No,
that's not true. That's not true. That is not true. The stock was up 61% last year, and headed into the year to date this year, it was flat, and it's outperformed the big 6 banks year to date. Expectations were really high. I'm not going to tell you that the quarter was perfect. It wasn't. It was mixed. But I think that they will benefit from net interest income going higher, net interest margins going higher, and this is all to do with the yield curve. Expenses was the biggest point on the conference call, that expenses will be flat this year. They reiterated that. So if you've got revenues that actually are going higher because of higher rates, offset a little bit by fees. I know the fees are going to be weak, but I think that their expenses can stay flat. I think earnings estimates actually go higher after this earnings report, Scott.
I don't know. With mortgage rates up and going up, that's not good, right? As many mortgages they originate there, that's not great news. Steph, I gotta run, but we will continue this conversation. Okay. Stephanie Link of Hightower, thank you so much.